Thanks for tuning in, Dividend Dashboard here. Welcome to the November portfolio update. I will be discussing the companies I bought, dividends received, and a full portfolio update where I go over the value of my portfolio, performance, and holdings in full transparency. So if you enjoy and support this type of videos, all I ask you is to hit that like and subscribe button. It helps put my name out there for the audience who hasn't discovered me. Let's dive in. For November, we kept it simple like the previous months. I bought 0.15 shares of Hershey's and 0.09 shares of Google. The amount I bought is minimal because in July of this year, I quit my 9-to-5 job to have a career break. So in order to preserve cash, I am not depositing to the brokerage account. The Hershey tranche was due to a big drop the stock went through in the last month of November, so adding to dollar cost average. For Google, on the other hand, regardless of the price, I added more to this core holding. I want Google to take a higher percentage of my portfolio. For the dividends received, 9 companies paid me a dividend. Apple, $1.17. Clorox, $6.11. Texas Instrument, $8.16. AbbVie, $9.33. MasterCard, $2.25. Procter & Gamble, $3.05. Starbucks, $11.18. Colgate, $4.19. And Realty Income, $5.76. For a total amount of $51.22 in dividends for the month of November. Year over year, this month is one of the highest paying months, even though the growth has normalized recently. By this, I mean that from 2020 to 2022, after becoming debt-free, I started investing more money. So that is why we see a triple-digit increase. As time went on, I started a core position in companies that have a slow starting dividend, but high growth long-term. So it diminishes the percentage increase seen in 2022 to 2024. It is still a good growth overall. It started from $2.71 to $51.22. For the portfolio update, I have a portfolio sitting at $24,371.34 with a dividend yield of 2.81%, which translates to a projected annual dividend of $550.90. No new holding has been added, so I still remain at 23 holdings. Performance-wise, the portfolio is doing decent. Again, not market-beating returns, but decent overall. Year-to-date, the portfolio is sitting at 16.77%. In order to have better returns with a dividend portfolio, I need to first consolidate, sell those holdings that are just too defensive or not performing as it should. And 2, increase my core holdings like Visa, MasterCard, and Google. Increase to a percentage higher than the S&P 500 holds. Those companies beat the market over a long period of time, so having a heavier percentage could bring juicier returns. I have mentioned that I am currently jobless, so I need to sort that out first before doing any portfolio changes. My current 23 holdings are a combination of blue chip companies and high quality compounders. Going clockwise, we have Apple, Colgate, Coca-Cola, Realty Income, Procter & Gamble, Waste Management, Clorox, Kroger, Kimberly-Clark, Starbucks, JP Morgan Chase, Home Depot, Johnson & Johnson, Nike, Digital Realty Trust, AbbVie, Texas Instrument, Hershey's, Pepsi, Visa, Automatic Data Processing, MasterCard, and Alphabet, the parent company of Google. My top 3 largest holding, we have Hershey's with 10.38%, Starbucks with 7.73%, and MasterCard with 7.46%. While my smallest holdings, we have Home Depot with 2.21%, Automatic Data Processing with 1.29%, and Coca-Cola with 0.85%. I haven't sold any position, but I do acknowledge that I have a lot of defensiveness while being in a market that is going up. That defensiveness is holding the growth of the portfolio overall, and I really want to consolidate and concentrate it, but I want to do it when I get the contributions back to the portfolio. I have been hunting for a job, and so far, no luck. Annual dividend per holding, this chart doesn't move as much since I'm only reinvesting dividends with no contributions. Hershey's and Realty Income remains as the highest payers, while Starbucks is slowly climbing up. This is due to the dividend increases, which all companies in this portfolio do. I showed this graph for full transparency purposes, so if you want me to take it off for future updates until I get my contributions back, let me know in the comment section. Total return. JP Morgan has dethroned Apple as the biggest total return in the portfolio, 110% versus 108%. Digital Realty Trust coming up third with 103%. The companies I have in the red are the same ones from the previous updates: Johnson & Johnson, Nike, Hershey, and Pepsi. They swing in value a lot throughout the month, and I am not worried about it, to be honest. Overall, this is a great portfolio with a vast amounts of companies. As always, there's room for growth and improvements. I just need to contribute back before making any sort of drastic changes. Hope you enjoyed this video. If you made it to this part, thank you so much for supporting me. Make sure to check my other videos for algorithm support, and as usual, I'll see you in the next one.